All right, hey everybody, and welcome to my next episode of my live option trading series where I show you all the trades and all the adjustments I made this past week. And this was definitely another very interesting week in the stock market. And the big story was inflation, right? In particular, inflation has now hit a 40-year high, and no doubt that definitely spooked the market. So that's also the main thing I'll be talking about in this video, and alongside that, I'll be showing you a lot of technical analysis on both the S&P 500 and the NASDAQ, so you can see very accurately how the market was reacting to the inflation story as it was unfolding throughout the week. And in my humble opinion here, and definitely as you'll see through my analysis in the video, things are definitely not looking good for the bulls at the moment. I'm still pretty bearish on the market in general, especially after what we saw this past week, so I would not be surprised if in the near future, things started to get pretty ugly again. And also on top of all the charting analysis that you'll see in the video, you'll also see a lot of adjustments I made to my existing positions, which were a result of what I'm seeing in the charts here and my overall bearish assumptions on the market. Now, as always, before we dive in here, in case you are brand new to the channel, my name is Scott Reese, and I'm here to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in case you want to see more trading or investing content after watching this video, you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, and so briefly here, just to give you a quick recap of what happened in the market this week. So what I'm showing you in this chart here is QQQ, an ETF that tracks the NASDAQ. We'll go ahead and zoom in a bit. So the beginning of this week, as I'll discuss here in a moment, was actually very boring. So these two candles right here were Monday and Tuesday. And as you can see, along with Thursday and Friday of the prior week, the market has pretty much just been going sideways. But then in the second half of this week, things definitely got a lot more interesting. And essentially, there was a lot of buildup of anticipation for what the inflation number was going to look like for January. Right, in particular, on Thursday morning with this candle, that's when the CPI number, the Consumer Price Index, which is a measure of inflation, came out for the month of January. And as you'll see in this video, that number was really, really bad. Right, as of this past month, we are seeing a 40-year high in inflation, which is definitely not a good thing. And so ultimately, with that CPI number being really, really bad, we saw stocks turn around and retreat in a huge way in the second half of this week. And like I mentioned, I would not be surprised going forward in the near future, things got a whole lot worse. And so at this point, I'm going to stop here and play a few clips that I recorded throughout the week that again will show you in real time my charting analysis as things were kind of playing out throughout the week with that CPI number and the anticipation beforehand. And you'll see just how accurately the S&P 500 and the NASDAQ were following my various support and resistance levels. And then, of course, along with that, as I also mentioned, you'll see the various adjustments I was making throughout the week as well. So let's get started. Okay, today is Wednesday, February 9th, and the reason why I was not recording on Monday or Tuesday is simply because nothing was happening, and I didn't really make any trades either. So if you look at the charts here, this is SPY, an ETF that tracks the S&P 500. Let's go ahead and zoom in a bit. So like I was saying, for the past few days, with the exception of today, of course, the market has been pretty much going nowhere, right? It's basically just been back and forth chop, down, up, over and over and over again. But today, finally, we saw an actual big push higher. And that's what I've been waiting for. Until the market broke out of this short-term little consolidation pattern, I wasn't really doing anything. Because even though I'm still pretty bearish on the market right here, I could be totally wrong, and we might see all-time highs pretty darn soon again. So before I was going to go ahead and make more trades, I wanted to see what the market was going to potentially do. And in particular, I'm mostly concerned about this resistance line right there that I drew in last week. So this line right here is dividing all this overhead supply and basically the beginning of that pretty big crash we saw in January. It's dividing all that price action between where the market has been for the past couple weeks here. And so, as I mentioned in the previous live trading video, I do think that if the S&Ps can break above this point, which obviously might happen pretty darn soon here, then perhaps we might see a full-on recovery. And that's what the S&P 500 tried to do last week with this candle, and today it got to the exact same price point once again. So this definitely is a very pivotal moment. And actually tomorrow morning, we're going to see the new CPI number, the Consumer Price Index number from January. And this is basically a measurement of inflation. And that's kind of the main prevailing theme in the market right now. What is inflation going to be doing over the course of 2022? And then also based on the severity of inflation, how is the Federal Reserve going to combat that, right? How is the Fed going to respond by changing interest rates to keep inflation under control as much as possible? So basically come tomorrow morning, once that CPI number comes out and we can see just how bad inflation was for January, if it's much worse than expected, then perhaps we might see stocks go all the way back down again. But instead, if the CPI number comes back much better than expected, then perhaps we might see a big explosion or a big push higher. And that might signal a full-on recovery is on its way. So that's a little bit of chart analysis for you. Now, I also did make an adjustment to my Airbnb trade today as well. So for this trade, coming back to the charts, and let's go to ABNB, and then we'll go ahead and zoom in. So for this trade, when I put it on last week, I did note this resistance level right there in red, somewhere around $158 per share. And in particular, it was on this day, right when Airbnb got up to and touched that point, where I stepped in and sold a naked call option with a 162.5 strike, right around here. Now, as you can see right there, for the very, very short term, I was correct with Airbnb getting repelled off that point. But unfortunately, this stock did not drop far enough to actually meet my profit target. So that's why I continued to hold on to the trade. But unfortunately, right around there, at about $145 per share, Airbnb turned around and zipped right on higher. And now today it closed just below $170 per share, which of course is well above my short call strike. So I obviously had to play a lot of defense with this position today. And so the first thing I did here was on the market open, I purchased 100 shares of this stock because actually Airbnb opened at around $165.40 or so. So this stock had an overnight gap move higher and it opened above my short call strike. And the best price I could get filled at with those 100 shares was exactly $166. So that means the purchase price of those shares was $3.50 above my short call strike. And in fact, let me actually go over to the trade tab here and show you visually where my position is right now. So again, right there is my call option, 162.5 strike. And then I will also talk about my new put option here in a moment. So now let me go ahead and pull up the calculator. And I'll go ahead and move this right down there. So now let's say that Airbnb continues to either go higher or stay roughly around where it is right now. Well, in that case, in exactly 9 days come the February expiration date, I will likely get assigned on this call option here, which when that happens, I will have to sell 100 shares of this stock at my strike price at 162.5. So of course, if I bought the shares today at a price of 166, and then if I'm assigned on this contract, I have to sell them at a price of only 162.5, that means I'm going to lose $3.50 per share times 100 shares. That's a loss of $350. Now, I would also lose this exact same amount if Airbnb did fall back below my call strike before the expiration date. Because if that were to happen, then once it crosses my call strike, I'm going to sell those 100 shares and cut my losses on the stock at least. So either way here, if I get assigned on the call option or if Airbnb reverses, in either case, I'm going to sell these 100 shares that I bought today at a price of $162.50. So no matter what, I'm going to lock in this loss of $350. Now the good news is my starting credit on this position with this naked call option was $400. So that means I still have a net remaining credit of positive $50. Now that being said, that is still much lower than my initial profit target. On this trade here, my goal was to make at least $200 of that initial $400 starting credit. So of course, that also means that with any trade I make, because I pretty much always take my profits at 50% of the starting credit, that means I can always lose half of that credit and not make any adjustments. But obviously, as you can see here, my remaining net credit on the trade is far below 200. So therefore, in order to bring my credit back up to at least 200, that's why I also sold the 144 strike put option. And I also sold this one right after I purchased those 100 shares of stock on the market open. So at the time when Airbnb was a bit lower, I sold this contract for exactly $155, I think, in credit. So therefore, we can now add 155 and boom, my overall net credit on the trade is now back up to $205. So again, if Airbnb continues to push higher from here, or if it stays roughly around where it is now, or if it falls back down below my call strike and perhaps lands somewhere in between my call and my put, in either case, my net credit on the trade will still be $205. And hopefully come expiration in 9 days, when possibly both of these contracts expire worthless, or if I get assigned on the call option, whatever, then this here could still be the final outcome of the whole trade. The one thing that could disrupt this outcome from happening is if Airbnb fell back below my call strike and then went back above it and just kind of bounced around my call strike multiple times. Because in that case, I'll have to repeatedly buy and sell the stock for a small loss each time. Now, if that happens, I can still roll up my put option more and more and more to collect more and more credit. So we'll see what happens here. Again, with only 9 days remaining until the expiration date, that's not a lot of time for Airbnb to potentially screw with me a bit on this position. So I'm really hoping that come February 18th, I can walk away from this trade with at least some profit. So that's the update for today, and come tomorrow, we'll see with that new CPI number how the market is going to react. Okay, today is Thursday, February 10th, and we finally got our answer as to what the market is going to do once that CPI number came out, and boy, was it a doozy. And so briefly, if we come over here and take a look at this Yahoo Finance page, as you can see after the market closed today, which I'll talk a bit about in a second here, stock futures after the market closed declined even further after a very hot inflation print. So in particular here, once that CPI number for January came out at 8:30 a.m. Eastern Time, as you can see right here with this line, the CPI showed the biggest annual jump in inflation since 1982. So that is exactly 40 years ago. We are seeing the highest levels of inflation in 4 decades. And to be specific, the actual CPI number was 7.5% on an annualized basis. So this was definitely much worse than expected. And so, of course, as a result, we are seeing escalated calls for the Federal Reserve to, of course, raise interest rates. They failed to do that with their first FOMC meeting in January, but now they have even more of a reason to raise those rates. And so now coming back to the charts here, again, I'm showing you SPY. And as I expected with a very hot inflation number, we saw stocks reverse in a big way. So as I showed you in the previous clip, at the close of yesterday's market, SPY finished right below this resistance level that I drew in. And as I said, this was a very pivotal moment for the market. Depending on that CPI number, we could see a pop over that point, over that line, and resume to a full-on recovery. Or if the number came in much worse than expected, which it did, then we'll probably see stocks retreat in a big way. Now, the very interesting thing, though, was once that CPI number came out at 8:30 a.m., which was 1 hour before the market opened, pre-market, we saw futures and stocks in general tank in a huge way. So that's why on the market opened, everything opened much lower than the closing price of yesterday. And then, weirdly enough, for the first half of the trading day, we saw the market try to rally all the way back and once again touch that resistance level. Basically, the market here tried to make one last gasp of hope in trying to resume a recovery, but of course, with that inflation number being so bad, it could not hold. And that's why for the second half of the trading day, all stocks just slid right back on down. And so even though the S&Ps were definitely hit pretty hard today, the NASDAQ was hit the hardest. So let's take a look at QQQ real quick, and we'll zoom in on this chart as well. So same exact story here. The NASDAQ opened much lower, tried to, for the first half of the day, rally all the way back up to and touch the high of the previous day, but unfortunately it could not hold, and then it slid all the way back down again. So now at this point, what I'm expecting to see is stocks to continue sliding lower and lower and lower, and especially for the NASDAQ here to once again retest this support level. As you can see, there are multiple days where the NASDAQ was fighting that point, trying to remain above it, but now potentially we might come back down once again, and maybe this time it might break. So that's the story for the market today, and I'm definitely very eager to see what's going to happen here in the next few days. And so also as a result of this reversal in the market, I did try to take advantage of that and made a few more adjustments to my existing positions as well. So first off here, let's come back to Airbnb. And this stock in particular, unlike most stocks in the market, definitely had actually a very good day. So Airbnb actually spiked all the way up to $177 per share. Pretty crazy. And so at this point, once Airbnb got to that price point, that's when I actually bought back and took off my put options. So we'll come to the trade tab real quick here. If you recall from the previous clip, I'm short still the 162.5 strike call option, and then I was also short the 144 strike put option. And so again, at the high of the day for Airbnb, this option fell down to a price of around $70 or so, and at that point, I decided to buy it back. And in fact, just to double check here, let's come back to the monitor tab. And yes, right there you can see I bought back to close my 144 strike put option, and I did so for a debit of $68. So now this means if we come back to the trade tab, and actually let me go ahead and pull up the calculator here. After selling that put option yesterday for a credit of about $155, as you saw, my total net credit on the entire position was back up to right around 200, or 205 I think it was. So now by purchasing back that put option for a debit of $68, that brings my total net credit down to only $137. So yes, at this point, my total credit is below my profit target, but if Airbnb simply continues to go higher, and if by the expiration date this is my final profit, then I'm still okay with that. It may be a bit shy of my profit target, but still making $137 on a trade where clearly, directionally speaking, I am totally dead wrong is still nothing to complain about. Now that being said, like I was showing you on the charts, I do expect at least to see stocks come back down a little bit over the next few days. And so if that scenario does actually play out, then I might have the chance to resell this exact same put option, or perhaps something similar to it, for a much greater credit all over again. Right? For example, if come tomorrow Airbnb drops by $5 or $10, then the price of this put option is going to increase significantly. And if perhaps I can resell this exact same put option for another $150 or so, that would bring my net credit back up to $287, which is obviously a fair amount more than the $205 in credit that I had on when I sold that put option the first time. So that's my adjustment in Airbnb. And then also I did the exact same thing in my Docusign position as well. So we'll take a look at that real quick too. So for this trade, I'm still short the 119 strike call option, which is super far in the money. So I'm also long 100 shares of this stock. And then also I was short the 115 strike put option. So this trade here was a very narrow short strangle because I have had to make a lot of adjustments to this position to take in more and more credit. But same kind of idea here. For the first half of the trading day, when stocks were actually pushing higher, at the peak of the trading day, that's when I bought back to close this put option here. So again, if come tomorrow or over the course of the next few days, if Docusign comes back down in a big way, then I'll have the chance to potentially resell the exact same put option or something close to it for a lot more in additional credit. And I definitely need for this position as much additional credit as I can get. This is by far my worst trade that I have on at the moment. So that's Docusign, and then once again, did the exact same thing with my Nvidia position. Very similar story. Let's scroll down a bit here. I am short the 230 strike call option, super far in the money. So of course, I'm also long 100 shares of stock. And then I was also short the 220 strike put option. But again, same thing. At the high of the day, I bought the put option back for a very small debit. And hopefully if Nvidia falls back down tomorrow or over the course of the next few days, I could potentially resell this put option for a much higher credit. And then finally here, one last adjustment I made in my SE position. Let's check that out. So for this trade, I am short the 175 strike put option and have been for some time. And up until today, that was it. I was not short any other call option. And that's because for a long time, and we'll go back to the charts real quick here, this stock was selling off like crazy, especially during that mini crash we saw throughout January. So as you can see here, the stock got all the way down to a low of about $120, which is a full $55 below my short put strike of 175. But recently, during this little mini recovery, SE got all the way up to exactly $175. So it just pierced back above my put strike. And at that point, I made a small adjustment and sold a call option as well. And of course, the purpose of that was to take in extra credit. So if we come back to the trade tab one more time, in this case, as you can see here, I sold the 180 strike call option and did so for a little over $400 in additional premium. And so there you have it. My primary objective still right now is to continue making adjustments and playing a lot of defense with my positions pretty much until they expire come next Friday. That being said, I do have a little bit of available capital for a new trade or two, so we'll see what happens over the course of this next week. But again, pretty much what I'm trying to do here is just manage what I have until I can finally remove these positions. So that's it for this clip, and I will see you in the next one. Okay, welcome back. I hope you enjoyed those few clips there. And so now finally in this video, just want to show you the charts one last time here. So again, what I'm showing you here is QQQ, an ETF that tracks the NASDAQ. And like I mentioned in the previous clip, I was expecting stocks to continue to slide further today. And so far, that's exactly what's been happening. And my guess is at this point, we will continue to see stocks slide until they come all the way back down and meet this support level once again. So for the Qs here, that level is right around $350 per share or so, maybe a bit higher than that. And then if we come over to the S&P 500 or SPY, again, similar story here as well. And my guess is in this case, we might see SPY come down to either and meet the 200 period moving average here in yellow, or the support level I drew in this morning, which again is basically in the same exact kind of place as you saw with the NASDAQ, right? This line here is basically just above all these candles that happened or that played out a few weeks ago, where for a few days here, they were trying to pierce above that level. So during this time, this was acting as resistance, but once SPY broke above it, it then flipped to support. So point being here, if over the course of the next few days, the market does indeed come back down to these support levels, then if you are still bullish on the market, then perhaps right around here would be a good buying opportunity. You could perhaps play for a short-term bounce. And honestly, I might do that myself if I can see a pretty clear indication that yes, indeed, if the market does get down to this point and it does start to significantly rebound off that point, then perhaps, yeah, for the short term, I might sell some put options. But ultimately, if we do actually break down below this point, then I would say it is pretty much game on for much lower prices. And I would say the last bastion of hope or support, if that does play out, would be somewhere around here, right around $425 or so on SPY. So actually, let me go ahead and draw in that line. And there you go, right there. So actually maybe $427 per share. And if you follow it back all the way back until October of 2021, then yes, indeed, this price point definitely held as support during that time as well. But that being said, should this line break, if SPY gets below this point, then who knows what's going to happen at that point. It might be Armageddon all over again. Of course, I'm just purely speculating at this point. We obviously have to break below this point and then break below this one as well, but still just wanted to let you know where my head is at currently with this market right now. And so with that being said, that's going to conclude this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.